When you go to create a graph, you're given the option to show value area. If you click on that and hit create chart, value areas will show up within each bell curve or market profile. Here we're looking at daily profiles for crude oil, and in each bell curve you can see a rectangle. That's a value area. The way they're constructed is first we find the point of control or the high volume price, then we take one standard deviation of volume around that mean to construct a value area. They cover roughly 70% of the volume in a given time frame. It's where buyers and sellers agree on price most often. Here we're looking at weekly profiles for crude oil, and what I'd like to point out are the value areas, in particular the bottom of value or value area lows. As the market rises, we're going to use the value area low to define risk and trail stops. This way we can lock in profits. As long as the market keeps developing higher value, there's no reason to be out of a long position. Movement below the value area would suggest that sellers are operating and the trend may be changing. All the information seen in the chart is also shown in the spreadsheet that appears whenever you create a chart on the website. So you always know what the exact value area highs and lows are. Here we're looking at monthly profiles for crude oil. And what I want to point out here are value areas highs in a declining market. You can see how the market never got above the value area high from a previous month, which allowed us to trail a stop and keep a short position through a summer and into the new year. In fact, that trade was worth somewhere between $50 and $60 in a crude oil trade. The point is that value areas are instrumental in helping us define risk in a rising and falling market. So let's review. Value areas are the core high volume zones where buyers and sellers come together most often. It covers roughly 70% of the volume around the mean. They help us define risk. In a declining market, we use the value area high to trail stops and define risk. And in a rising market, we use the value area low to do the same. They're a good timing mechanism. We'll get into that in the timing section. They're also good for trade location or support and resistance when they're first tested.